And if you don't know me, my name's John DeRelay. I'm the head of revenue management education here at Wheelhouse. Have been doing revenue management for a very, very long time. The last 4 or 5 years with Wheelhouse, I get to talk with folks all over the country about what's going on and talk strategy and train on the Wheelhouse platform. Prior to that, I was the head of revenue management in an organization called Stay Alfred. So we were primarily an urban vacation rental organization, had about 3,000 listings prior to COVID. Unfortunately, they're not around anymore because it was lease arbitrage, and that was really hard during COVID. But we did have almost 200 listings in downtown San Diego when we were operating that company. So pretty cool. So I do have a little bit of experience in the market as well. Um, I'm going to give you just a brief, this is just a couple minutes kind of thing. This is being hosted by Wheelhouse. We will be using Wheelhouse market data to kind of dive in. Just so you guys know, if you are or are not a Wheelhouse user, we have a lot of great business intelligence tools to kind of help you. A lot of the market data I'm going to be showing you is actually accessible to you, whether or not you're a Wheelhouse client. We also have a really wonderful platform for tracking your own pickup and your own kind of portfolio data. And we actually do offer that for free. So if you're looking for some additional tools to access information on your own portfolio in the market, feel free to hit us up after this. We're happy to get you set up and trained on how to use those. And then if you obviously want to talk about our pricing platform, we're happy to sell that to you. Okay, so enough about that. Um, First place I want to go before we kind of dive into some data is just get kind of a brief understanding of like how things have been going for you this year. What is your perception about how the year's been going? What are some things you maybe have been working well or struggling with? Kind of anything, but just generally, how are things going for you in San Diego right now?
I'll chime in. Our
Yep.
first our first part of the year was really rough. It was actually probably our hardest year we've ever had because Airbnb kept telling us demand was way down, 30% down, supply was up 9-10%. And we really struggled to make sure our ADR was comparable to prior years, and it was a tough year for us. And we made a lot. We're still making a lot of changes in regards to processes, systems, software, et cetera, how we do things.
Awesome. So tough beginning of the year, hard to maintain the ADR. Airbnb reporting demand was down. How did the summer come together for you?
Ashley might be able to speak better to this, but I think summer we were on par with prior years and maybe even above on some listings and properties, which I was pleasantly surprised looking at the data.
Awesome. Leah or John, do you want to tell us how things were kind of going for you this year?
I can go. We had a decent spring, probably a little slower than we've had in the past. Our main focus has really been on occupancy. Summer was good. I would say fall is kind of, we're not getting a lot of those last minute September, October reservations. And we are seeing a tremendous amount of bookings for summer 2026.
Interesting. Okay.
So I don't know if that's people just trying to hold the slot, can't afford a vacation and booking and hoping for better times next year. I don't know, but we're pacing significantly ahead for next summer.
Yeah, that's actually kind of a national trend right now where there's
Mhm.
really early advanced booking remains strong and then it tends to fall off in the middle. And then there's really,
Mhm.
really strong last minute booking, but obviously rate is very variable in that last minute booking. And so this kind of like missing middle is something revenue managers have been talking about a lot, which is that middle booking window is just consistently weaker and weaker. Nobody knows. I don't
Mhm.
think there's a silver bullet for why. I think it's a number of conditions. I think it's one, consumer behavior is changing a little bit to be shorter, but I don't think that's all of it by any means. Two, I think a lot of it is economics. Like at the end of the day, purchasing travel is purchasing futures. So the really early bookers are like, I pulled up an article that talks about this. There's some people that have a hunch, like people expect inflation to keep going up. And so if you buy it now, it'll be cheaper if you're really sure you're going to travel. We also know that cancellation policies are a little lighter, so can just hold spots, those kind of people. Some people in the Southeast have some hunches that we really see these drop-offs when deposit policies change. where you go from putting down a deposit, which people can afford, to paying in full, which people can't afford unless they're just going to make the trip last minute. And so they've seen, we have a big organization in Alabama, and that's something they're looking really deeply into is like they think there's this big correlation between as soon as their deposit policy hits, they see huge drop-offs in sales. And they aren't sure what to do about it yet, but that seems to be like that economic condition kind of piece. Um, so those seem to be trends that are occurring kind of everywhere. So good observation. John, do you want to tell us a little bit about what you're seeing?
Sure. So for August, our San Diego portfolio did fairly well, actually. All of our KPIs ended ahead. The one thing we did see a pretty sharp drop off is booking window. I've been seeing a lot more last minute bookings for September and now October. Um, Trying to be a little more competitive further out, but just still not really seeing much traction for our units right now. It's just all last minute bookings at this point.
Yeah, that makes sense. And that's the other piece I forgot to mention in like where the booking window is shorter. Me, when I look at a lot of these markets, I think our industry still prices too high, too far out. It's very common, and I'll show you guys this. We'll see if it's occurring in this market. It's very common for people to still have very large premiums outside of 30 and 60 days, sometimes 90 if they're looking further out at a market level. And that I think contributes to the booking window difficulty because the market doesn't do a good job of finding what the consumer's budget is early enough. And so it all ends up happening in a very compressed time frame. Now, there are some considerations here, which because there's so much diversity in like the size of people's portfolios, there's different risk levels where like if you have smaller portfolios, you really are incentivized to hold your price higher. Um, and so that contributes to the market being, potentially overpriced because everyone with small portfolios wants to hold their price higher, right? Whereas larger portfolios are going to be a little bit more conservative. So there's some difficulty there, but I do think we'll take a look and see if in San Diego the price seems to be holding pretty high, but that's a trend I see in most markets around the country. Particularly the markets that don't have like lots of really large long-term like established enterprise brands, is the markets themselves tend to be overpriced for where they actually end up. Um, okay, cool. Any other comments before I move into a few things that kind of caught my interest? All right. So one of the things I like to do before I hop into the Wheelhouse data, I do like to kind of poke around and see what is being reported about, um, the market in general, and also what is available in a market. So I like to look at CVB data. I like to look at what's kind of in the news right now to see what people are saying, things like that. San Diego's CVB doesn't have a lot of public data, but the state of California has pretty good data, and it looks like they have really good data if you are a member of whatever their bureau is and you can log in. So something to keep in mind, I wasn't able to access the login stuff, but if you do have logins to that, the state of California maintains very, very good data uh, on their Visit California website. And I bring that up because I find that like state data is really good when communicating with owners about trends. Because, an owner is going to be like, oh, well, you're telling me the occupancy is down or this is happening. But if you can support that with data from other sources that they, won't necessarily argue with, that can be really helpful. And the state of California data is good. One of the ones that is freely available, and they do have some free stuff that you can access in detail, is international travel. And I think that's a big theme this year in states and markets where that's important, right? So if we look at markets like the Northeast this year, this summer, is down double digits consistently all year. And a big portion of that is because Canadian travel is down so much across the country, and that's a big part of their business. In Florida, not such a big deal, but Miami, they're feeling it a little, but Latin American travel isn't down as much, so they're not feeling it quite the same way. In California, and I don't have this all the way down to the San Diego level, you can see that Canadian travel does have some impact. It's down about 32%, and it is the second largest travel group in the state of California. How that comes down to San Diego, you guys will have to kind of look at. And I didn't pull this up here. I was able to find it at one point, but I don't remember where it was. But it's probably worth understanding like what percentage of travel to California is actually international. I guarantee you it's not that big of a chunk still. Most of the travel is going to be domestic still, like probably well over 90%. So we're talking about, a big reduction in Canada, but that's maybe making up 1 to 2, maybe 3% of the travel in California as a whole. In general, this overall down almost 10% in international air entry, and San Diego being an air spot for international, that may be impacting you a little bit. What's interesting to me is this one may also be having a fairly big impact, the Chinese travel being down, Chinese tourist travel. Now, I did a webinar with people in Australia, and something that I think was really interesting, which is maybe a good sign potentially for the United States, is that Australia's government tourism department at the beginning of the year had forecasted that Chinese travel would be down for Australia, and China is their biggest international market other than the United States. Um, they have since revised that. So in a surprise that they're not totally sure why, maybe just Chinese economic conditions, Chinese travel is actually going up, so they've revised that up. That may filter down to us. So this one's hard to break down. I thought it was important that Australia thought Chinese travel was going to be down. We're seeing it down. Obviously, our political situation will affect that as well, but it does seem that Chinese travel is a little stronger than was expected this year. Okay, so we'll get off the international because I can't break this down into a smaller region right now. There's a few other reports that I think are interesting. I'm going to run through these real quickly, but this is from the state of California too. They did a big report about hotel performance and forecasting for the year, and this one's just consumer sentiment. And so I think consumer sentiment things are really interesting. They really impact how far in advance people are going to book and affect us in that booking window. And you can really see that like the expectation and really all metrics of consumer sentiment have taken a nosedive since the beginning of 2025 and have shown no signs of really increasing. And so when you're preparing your strategy, like at a top level, and you're thinking, to yourself, are things going to get better? Are things going to get worse? Do I want to be more conservative or do I want to be less conservative? I think any kind of consumer sentiment understanding is going to impact that, right? Like you're going to say, hey, if if the buyers don't think it's going to be good, I should not price as if things are going to get better, right? Um, And then this one I thought was pretty interesting too, right? So I have 2 articles here. They're very, very recent, within the last month, about the San Diego hotel market. And there's some interesting things here that are kind of mixed signals in a way, right? So the first one I like to look at, I think this is a great thing to look at if you're in an urban market for reporting to owners, but it's like it's the hospitality tax receipts. I couldn't get a report on the hospitality tax receipts, but I don't know if the Visit San Diego does that if you're a member. But getting those tax receipts is helpful, right? Like I talked to markets in Alabama and they're like, tax receipts are down 7%. That's all we have to tell our owners. We're collecting less. Now in San Diego, tax receipts are actually still up. So we're still generating more tax receipt revenue for the city than we were previously. But
that may partially be because we just raised our tax rate.
That's what the article says. Raise the tax, and also prices are higher in the hotel world as well. They're continuing to push price, but they go into that occupancy really hasn't recovered from pre-COVID occupancies. And it's kind of flatlining a little bit. So there are some concerns there. And I did pull up this other article, which I think is interesting, that from CoStar, which is a big real estate data platform. They also own Smith Travel Research, which has all the hotel data. San Diego's hotel pipeline is one of the highest in the country coming into the next few years. So not only is occupancy kind of flatlining, but there's going to be a lot more inventory entering the market over the next few years. So there's going to be that competition on the hotel side. So that's just something to keep in mind is like things aren't really bad because people are still coming, they're spending more money. Obviously, taxes are higher, which will impact what you can charge. But there is going to be more rooms coming into the market over the next few years. And so that's going to further impact the demand situation if demand doesn't increase. I'll have Edson send you guys these articles. You can take a look at them. if you like, but that kind of sets the stage for where things are, right? Things are maybe a little stable, but already off the bat, I'm thinking like, hey, if I'm looking into the end of this year and next year, I probably want to be conservative because there's too many things that could impact occupancy in a negative way that I don't want to be caught. And we already know that like the booking window's harder. Probably better to have a little like a bird in hand at a little less ADR than a higher ADR and hoping that it flies into the bush or whatever. I don't know what the idiom is. Okay, so anyone want to comment or have any thoughts on that stuff?
I think you're spot on.
Awesome. Well, this next piece I'm going to go to, and let me get out a pen. So this is a Wheelhouse market report here. So if you log into Wheelhouse, it's under this market section. You can actually access any market in the country. These are going to be pretty broad. So you can see that I'm looking at all of this like San Diego market and all the submarkets. So we're looking at a pretty high level view right now. I do have a smaller set built for La Jolla, and the system does have the capability to build those, but I'm going to start here just so we can get this kind of like high level view. One of the benefits of this market report is this is free. So whether you're a Wheelhouse pricing customer or not, you can create an account with Wheelhouse and access these market reports for any market in the country. So keep that in mind. For now, I'm going to hop over to this trends section, and we're going to look at this kind of high level on a few data points that I think are pretty useful. So the trends section is going to show us month over month, year over year for KPIs. We'll start with occupancy, and I'm just going to flip a few of these off. I don't need to see 22, 23, and 26 right now. We're just going to show 24 and 25. And this is a chart that I think is really great for sharing with owners what's going on because, we know we have a lot of KPIs, but at the end of the day, you need the owners to just agree with your strategy. And usually an owner can read an occupancy graph, and it's usually pretty binary. If occupancy is down, things are probably more difficult. And if occupancy is up, things are probably going fine. And so when we look at this, we see that January and February up a little bit in occupancy, actually, in the market. And this is something that this is kind of a national trend. This was kind of true across the board in the country. Is January and February up a little. Now, these aren't like super high seasons for most people, so a lot of people wouldn't necessarily notice it. And this ties into something else that if you were at DARM or VRMA at the end of 2024, advanced booking was also really strong. So booking for 2025 was really, really good that year. Once we hit about March, pretty much countrywide, everyone starts seeing shortfalls. Now, some of these shortfalls may be because of Easter, but this causes a lot of panic. In the Southeast, we see a lot of weakness all across the Eastern Seaboard. Those are the main places that would have had demand. The Northeast was definitely down, but their occupancy is like 4%, so nobody even noticed. It ended up being like 1%, but nobody noticed, right? But once we hit March, we start to see a lot of pressure on the occupancy pretty much across the board. And that countrywide pretty much continues through the spring, right? We see pressure in March. Some markets start to see a recovery in April, but it doesn't make up for the loss in March. So we can't attribute this kind of drop to just moving of Easter and things like that. And then May tends to be under pressure too. And that's consistent across most of the country. And that seems to be consistent here in San Diego too, right? We're seeing pretty much consistent occupancy pressure once we hit March, meaning there are more options for the consumers to buy. The consumer is not incentivized to make a choice. And if you're from a pricing perspective, you're competing with more people around you. As we get into summer, we start to see deviations across the country. In San Diego, that occupancy pressure is going to continue. So we're pretty much just seeing consistent occupancy pressure in the short-term rental world. And keep in mind, this data right now I'm showing you is all listings. So it's not just professionals. It's not just, certain kinds of properties. We're really looking at every listing from the host or VRBO to the enterprise client. Something I do think that's fairly consistent is professionals tend to be performing better than the market at large. If you're using key data as a data source, you tend to see that because key data will show you primarily professional data. And the professionals are able to take a little bit more market share because one, they're more reactive. Two, they're able to look out a little bit further. Three, they're managing the business a little bit differently. But as a whole in the market, we are seeing this occupancy pressure. Some people are going unbooked or getting less booked nights on the books.
I have a question.
Yes.
Is there a spot in here that shows how many listings are accounted for in this?
It's over here. So we're tracking, sorry, in this market area, we're tracking about 14,800 listings.
Okay.
We do have a separate metric called bookable nights. This is hard to figure out how many listings because not every listing is open
Yeah.
the same amount of time, you know? But it is a pretty big market area that we're looking at across the board.
Okay, perfect.
Now, looking into the fall, uh, so this isn't going to be super obvious, but I did pull up the pacing data for where these months were at this time. So in September, right now we're at 30.8%. We were at about 39% last year, so we're pretty much right on pace for September at a market level. October is, and keep in mind, this is both areas, right? This is the entirety of the downtown. This is basically everything there. In October, we're at 16.6%, and we were at about that same point last year. So looking forward across the whole market, the pacing is just kind of stable. Like the same is true in November. We're within 1%, and in December, we're about within 1% of roughly where the occupancy was last year, right? So basically the fall is kind of just following in line with the occupancy side, with where it was in a previous year, which is kind of a good sign, considering we have these shortfalls. But I think the big concern here, and maybe we'll have some time to pull this up, is that booking window question. When you guys are looking at your booking windows shortening, and this is an assumption I have, and also from primarily operating in the downtown when I was there, urban markets have shorter booking windows. And so wherever that missing middle drop off is going to occur is going to be really important and may not have happened yet, right? And so for October in particular, I think that may be a little early. September pacing, I think, is going to be really, really key. How are you guys pacing for September right now? Leah, you mentioned you're a little behind. Greg, how are you doing?
Ashley question, I'm not sure, to tell you the truth.
We're a little behind as well.
But on that note, we had a meeting with our Airbnb rep recently, and she actually gave us similar numbers in regards to, I believe she said September was down about 1% and October was trending about 4% down right now. So I think your numbers, I don't know where they get their numbers, but it seems to be all the same.
Yeah, their numbers, that sounds similar enough. Our numbers are going to come a lot from direct data and from tracking data across all channels. Airbnb's will just be Airbnb's data. The other thing I think that is interesting that may be skewing this a bit, that we have to consider here is what I did is I just went and checked the proportion of one bedrooms because we're covering the downtown. We have a really big proportion of one bedrooms in this market set. And one bedrooms are going to be the least affected by the fact that there's a missing middle because they already have short booking windows and people will book them last minute. This is a trend that I see across the fall in the Panhandle, which is condos are doing okay, but the big homes are like empty, which is like a reversal of what they would normally expect. Because if they didn't get them booked early, now they're not booking in that middle booking window, and then they're not really sure how to sell them in the short term, or they're not confident if they're going to sell in the short term, right? So
I'd be interested if Leah, I know Leah has, Blue Water has a lot of bigger homes and very high-end homes. I'm wondering if that's true for Blue Water, Leah.
We're seeing like a lot of inconsistent patterns. We have some of our larger homes are doing very, very well, and some of our larger homes are doing extremely poor, which like in our aggregated data is appearing that we're, a little under or a little over, depending upon the time. So we're having to go almost home specific and to be honest, we haven't been able to identify. We've kind of been hitting like, what are the different levers that we can pull for some of these homes? Because some of them, oddly enough, are pretty consistent in terms of the amenities they offer, or where they're at, or what type of demographic would rent them. So to us, to be honest, it's probably not a great answer, but some of it's a little bit of a mystery. Some of it almost to me seems like display rankings, like it's not getting in front of people versus the ones that are. But again, our mix of bookings are probably close to half Blue Water bookings, so it doesn't completely explain the entire story.
That
It's funny you say that
inconsistency.
real quick. I saw Paul at a concert just recently at Creed concert about a month
Oh,
ago,
nice.
and he said he pretty much said the same thing in not so many words.
Yeah, it's we're doing like some deep dive analytically on each listing. And to be honest, some of the ones that you think would be underperforming are over. And then the ones that you're like, what on earth is going on here, are underperforming. And I honestly don't have a lot of answers for some of it.
And I would
That
say our
inconsistency
properties
is
are very similar. There's kind of a mystery to some of them why they're not
Yeah.
performing.
whether or not that why they're performing the way they are.
And it becomes very difficult to explain that to owners when you can't figure it out yourself. So.
Yeah. Well, and that inconsistency is visible in this market data a little bit. So when I'm looking at the market average for occupancy, we're at about almost 31 for September and almost 17 for October. If I go to the large homes, the gross occupancy is actually lower for September, but it's higher for October. And you would expect it to be higher, but it's weird that it's like not consistent also. You know what I mean? Um, the reason I say you'd only expect it to be higher for October is because they tend to book earlier than those lower ones. But the fact is, it is lower for September. So you have these inconsistencies even in the market data. So even though we're looking at this market pacing being kind of like about right on the market level, that's not necessarily true when you start getting into these different groups of properties, that they may be pacing in all kinds of different variations. One of the things I've been thinking, and it's interesting you brought up the distribution, Leah, because really for the last year on the revenue management roundtables, which are our big revenue management webinars, uh, distribution has been one of the most consistent topics for revenue managers. Like if you go back about a year, it was primarily pricing and then a little distribution. Now it's primarily distribution and a little bit of pricing. It's like people know like, well, we're going to cut the rate. If we're going to cut the rate, we need to make sure that the properties are being shown. We need to make sure that they're being seen. And rate is an aspect of that, right? Understanding that like if the market's overpriced, you may not need to do much to be better priced, which will boost your position, right? Or like something I remind people is they maybe are cutting rate and whatever that time period they're cutting is, experiment with changing the time period because if you're cutting and you're like, man, that was a big cut to me, if the whole market also is cutting at the same time, to the consumer, it doesn't really look like you're cutting at all, right? And so that timing is important where if you're thinking that, you know, hey, I normally cut within 14 days, try a smaller cut at 30 and see if you can outpace the market's cuts because when occupancy is under pressure like this across the market, you can generally expect that the short term everybody's cutting. And if you're just following that cut, even if you don't mean to the consumer, you may not actually be improving your position. For the distribution algorithms. One other thing I like to just glance at quickly is just the highest performing listings. So this is the top 20% in the market. Few things to point out here. You'll notice one, overall occupancies are much higher as we would expect, right? We're also seeing, we still see the pressure, but it's not as much, right? So you can see in August, there's very, very little occupancy pressure. There was actually quite a bit of a capability to maintain among the highest occupancy group. Same with April. We also see that there's much more on the books for September, right? September was around 50% of what was done last year, a little more than 50%. This is almost 2/3, right? Or maybe even more than 2/3. So there's a lot more market share being taken by these top properties. Pretty much for both months, right? They're taking the market share from everybody else. And you know, kind of finding out what they're doing is, I think, is going to be really key. Now, let's hop over and take a look at some pricing data. So I'm going to pull up asking rates. This is kind of a unique view for pricing. So asking rates are they're the average of what's being advertised, not necessarily what's being sold. So it's a little different than ADR. We're basically scraping all the rates that are being shown, and we're showing you the averages of what those are, whether or not the property gets booked. So when you go back in time, it'll show you the asking rate that we saw before it got booked, but it'll also show you the rates of people whose properties were left open. And I think looking at the whole market, we do see that kind of trend that I was talking about earlier, which is as a whole in the industry, prices tend to be a little bit too high. You can see that despite the fact that there's pressure across this market, average prices are still higher across the board at a market level. So the market is basically pushing price despite the fact that the market is under occupancy. And this is especially true as we look further out. That actually increases the more in the future you are, to the point where, like, October is at a market level is really not even being probably priced competitively by the majority of the market. Which means that for you guys, if you're trying to make up occupancy, there may be some really easy opportunities by pricing really effectively or conservatively in these shoulder seasons to drive occupancy. Because if people are looking, then prices are really high across the market as an average. Now, something I do like to also look here is the high performers. And you usually see a pretty big difference in performance here. For one, there's a lot more response to the fact that the market's under pressure. Those top performing listings are not pushing price pretty much across the year. And then when you look out here, they're price managing September and October totally different than the rest of the market. They're still a little bit high in November, but it's like half the premium. And so they're basically looking out twice as far. And that's like the message I've been giving to people all year is like, look at your revenue management practice. Think, how far out am I making cuts? How far am I looking? And double it. And if you really have the resources, triple it. And stagger these things you're doing in the compressed time period further out. Something else I usually recommend with shoulder seasons is there's really not, in this post-COVID world, a ton of reason to hold premiums in shoulder seasons, where the way you make your money as a company is by having occupancy. You're going to always make more money by driving higher occupancy than driving increases in ADR in these shoulder seasons. And so if you have premiums out here, really just position those much more conservatively early on and let that occupancy build up. That's something I think that's pretty consistent. We see a lot of this among the largest clients, especially across the Panhandle. I bring up the Panhandle a lot because they have such large organizations there that have, multiple member revenue management orgs. And that's like a big strategy for them, is making sure that any time period where occupancy would be considered a shoulder or a low. So in San Diego, we're probably looking at January, February. We're probably looking at the fall and winter. Just make sure that your rates aren't more than like 5 or 10% above what you were kind of doing on average historically early out. Because we saw at the market level, the market is priced very, very high in these time periods. And you only have to undercut them reasonably, and that might still be more than what you were making. But if you can drive that occupancy, it's going to end up being a lot more on the books for your company. The only caveat to that is if you have properties that are doing really well, maybe don't change your strategy. Yeah. So yeah, what are you guys' thoughts on that?
I love this. I just like to be able to look at specific areas, because San Diego as a whole is so broad between downtown and inland and coastal and North County. I think some of the data, I think we might have a little better insight by being able to drill into it a little bit.
Totally. Let me show you something. I didn't do a lot of prep on this, so bear with me. I did create a La Jolla group. Feel free to correct me if I chose the wrong spot. I live in Washington State. I've never been to San Diego. Except for through the airport, I suppose. And we do have a way to get to this data. Now, these market reports are free. The sets data where you can drill in isn't fully free, but it's kind of like a pay as you use. So you don't have to, it's essentially, I'll give you a brief, I don't want to do too much product stuff here because it's not really the focus of this. But if we went down to San Diego and I wanted to pick a specific spot, I can actually just, oops, picked the wrong one. I wanted the polygon. I can just draw where I want my data to come from on the map. And then I can use some filters. So in this La Jolla one, I filtered out listings that had really low occupancy. I want to look at stuff that's a little higher, so it's not like the full market. So I went down here and I did two. I picked anything that was over 50% occupancy in the last year, and the last year is up here. And I also picked stuff that had at least 180 days available, so that weren't like only available for a weekend or something. Well, actually more than a weekend, right? And that filters down my list. And then if I add to set, I'm basically adding them. And then I went ahead and just saved this as a set. So I went to create set. I can name it, you know, and then at this point, it will save the group of listings for me. And in order to access the data, it'll ask me to pay for it. And it's a monthly subscription that you can turn off at any time. So you could pay for a month, access the data, turn it off. If you want to come back to the data, you could turn it back on. So this is a paid tool to get into that. But that market data tool is free. I pulled this one up for La Jolla. This is what it looks like when you pay. You can also do other stuff with the data. I have some information here about like how the listings are picking up. I can see kind of where their pricing is. If you have your own listings in Wheelhouse, you can also see your own listing stuff against it. So you can assign listings to this. But I'm going to go over here to this trend section, which mirrors what we have on the market report. And I'm going to look at just a little bit about what's going on here. So a few caveats. This is the market set for this area that I built. I am looking at listings that had 60% more or 50% more or more average occupancy over the last year. And we're open at least half the year. So I did do a little filtering. One other caveat here is the sets data is going to be a little different than the market report data. So we do allow you to go into the listing level and get estimates of their performance. This is free. This is only the scrape data and our analysis of the scrape data. We don't share the direct data we have from our clients here. So this data here is going to be, I think, pretty accurate, but it's not going to be as accurate as the market report data because the market report data includes all of our direct source data. So little caveat, but still fairly useful, especially when we're just looking at trends to see how things are going. And the short answer here is in La Jolla, we see a similar trend here for January, February. We start to see this pressure in the spring, but that pressure does lighten up a little bit more in the summer here, right? We don't see quite the same amount of pressure that we saw when we were looking at San Diego as a whole. Were you going to say something, Leah? Okay. Looking forward into September, I would say that I would have to do some calculations to know the exact pace, but this looks a little bit more like that top 20% for San Diego. So there's more on the books. We're a little over 2/3. So it looks a little better to me than the market as a whole, but that's probably more in line because I imagine that people book a little earlier in this area than if you're in downtown, right? And this, I'll maybe record a video to show you how I'm getting to that exact pacing. I'm actually using a different part of the data in here to calculate it. But this would allow you to get into kind of these specifics of these specific regions or specifics into different bedroom counts, because that's a filter as well. My answer here, just looking at La Jolla, is that we're seeing a pretty similar trend in that there's pressure, but there's a little lighter pressure in the peak season. And I think the fall is probably looking a little better. However, 69%. Where did the market report for San Diego go? I'm going to make a snap napkin math assessment here. So 50%. Yeah, I mean, overall occupancy is just so much higher. I would probably say it's probably pretty similar as a position. Just because even though we're in a higher position for what's on the books this year, it also needs to get to a much higher position. And October seems to be a little bit worse, a little less than 2/3. So I'm using those proportions, right? I have some heuristics in my mind when I look at market data. One of them is like if you're less than 50% at the start of the month to what you did last year, almost guaranteed you're going to have a shortfall. 2/3 is usually okay. And then depending on what you know about your market, you would shift those heuristics. But those tend to be good starting point heuristics if you don't have some, is like, 2/3 in the month, 1/3 into the next month. Usually something that you can use to start assessing market data if you don't know the exact values for your market. And if you want to know the exact values for your market, this is on both the market reports and this. If I go into the graph section and go to lead time, this will give us a distribution chart. And so if I went to October 2024, there's a few points that I like to look for, right? 50% on this green line is at 50 days. So to me, that would mean that October is actually kind of far behind, right? Because 50 days from the end of October is like in a week, and we weren't at 50% on the books. You know what I mean? So that changes it, right? And that's the simple way to start to get those heuristics is like, where's the 50% mark? Where's the 80% mark? And you can kind of compare. The goal is to product wise to make that just visible to you. But right now you got to do a little revenue management magic to napkin math that. Awesome. Well, we're a little early. If you like, I can make a set for a specific region if you like, and we can take a look at that. Or if you want the time back, we're welcome to take it. Or if you have some questions for me about strategy or things like that, I'm happy to talk through it. The other component we didn't talk about here is how you're pacing. That's the other part you always want to compare. Like if you're pacing really ahead for October, that's different action than if you're pacing really far behind what you did last year, obviously. But at least knowing that the market as a whole is kind of in line maybe helps with some of the risk tolerance you might be deciding. Awesome. Well, do you guys want me to pull up a specific region for you, or do you want to take your time back?
Yeah, I'd love for you to do Pacific Beach and Mission Beach while you're if we have the time and nobody else has questions. I'm sure Leo would benefit from that too.
Yeah, works for me. It sounds great.
Pull up another map here. Okay, so that's going to be like.
It's going to be everything from the north of the water. No, it's going to be, yeah, down all the way down. Yeah, to right. That's fine.
Okay.
That's going to get Sunset Cliffs and Point Loma too, which is fine. Yep.
Yeah, you can tell you're West Coast people when I do this with people in the South. They get a little irritated when I don't know exactly what their little regions are.
We like to think we're more relaxed over here.
Yeah, I always joke, in Washington, like, welcome to life in the slow lane. It's like that's the left lane here. No, I don't think that's true in California. You guys don't drive like that. Okay, so let's filter this down a little bit. This is a pretty big set. Oops. Oh, never mind. I just added it with the filters already. So where is, let's view the metrics. This might take a moment to load in all the data. There we go. Okay, so glancing at this at a glance, quite a bit of pressure here and here. I think the summer did worse than La Jolla in this area. There was more pressure on the occupancy across the summer, but a little bit like the spring was a little bit more inconsistent, like it was a little up and down. And then looking into the fall, a little less than 2/3, so a little bit less gross on the books for September, a little bit less gross on the books for October. And then if we look at the lead time, let me write down a few numbers here. Oops, not 2025, 2024. Oh, why didn't that pull like that? That's not correct. Ah, maybe it's not done. Oh, I know why. I'm on the wrong graph. I'm on length of stay and not lead time. Okay, so how many days till the end of October? It is 81 days. 81. 79.7 times, so 0.797, and then on the books we have 20.4, 8.4, and last year 66.9. So October is actually up a little bit, so the booking window must be fairly short in this time period for this market area. So what I did is I took that like 79% was on the books and I multiplied that by the total, like what that was, and then I'm comparing it to this year's on the books. So we're up a little bit here. And that to me means the booking window is really short, which I think makes sense for kind of a shoulder season in October. So I didn't filter this down into different property types. I think that doing this work at the more regional level definitely makes sense to align this better with your bedroom count, right? Because especially in an urban market, the differences in the bedroom count are really going to have a big impact. I think we saw that at the top level where like the larger properties were really inconsistent, and that kind of market average was being bolstered by the fact that there is a bunch of short-term, like short notice, one bedroom properties that, are probably pacing fine because the reason they're pacing fine is they didn't have anything on the books last year. You know what I mean? Let's take a quick look at the asking rates one. Now, this I think is pretty interesting. Keep in mind we did filter this down a little bit to look at properties. So we're filtering out properties that aren't performing. But I do think that there's a little bit of a premium here going forward into the future in the market, but it's not that high, not like we were looking at the market level, like the entire market level. So there is more responsiveness here. It's not until you get to November that people are further out, but we still are looking at things a little high, which might be fine because the pacing isn't looking off too bad. Like the pacing's not looking really negative yet. But that does mean if you're pacing, you have some pacing concerns in your portfolio, you may not have to make big moves as long as you're making them early. You know what I mean? Awesome. Well, I think that's what I've got for you guys today. Did you guys find that helpful or interesting?
Very helpful.
Awesome.
Very helpful. Thank you.
No problem. Well, we'll get the recording up sometime this week. We'll send it out to you so you can reference it. Keep in mind, a lot of this data is free. If you do need some additional like data tools to see your own performance in comparison to the market, let us know. We're happy to give you a demo. A lot of them are free, and we'll give you some training on how to do that with some process as well. And then I would look out for us doing this probably at the very beginning of Q1 as we look at for the spring season kind of booking window.
Sure. And John, I really appreciate your time doing this as well. You said you could send some of these articles our way
Yep.
that you had here. That'd be great. I know I could use that in some of our information we give to our owners.
Absolutely. I'll have Edson send these articles after the call.
Yeah, and I'd love to sign up for a free account at this point as well, too. So
Perfect. Yeah, there's a lot of great tools, and the pricing's good too. Leah can vouch for it, or if she doesn't want to vouch for it, she'll maybe tell you to talk to her afterwards.
No, I always vouch for you guys. Actually, I have a funny story from you too, but we'll talk about it later. Okay, well, thanks for your time today. I appreciate it.
Pleasure, guys. Have a good one.
You too.
Thank
Bye-bye.
you. Bye.
Take care. Thank you.